In this video, I'm going to discuss about throughput accounting. Before we discuss about throughput accounting, let's get to know about constraints or bottlenecks. Because in order to understand throughput accounting better, you need to know about this topic, constraints or bottlenecks. A constraint is any factor or limitation that restricts the performance or output of a system, process, or organization. A constraint can be a person, a machine, an activity, or even a whole process, which restricts the performance or output of a system, process, or organization. Constraints can occur at various levels within a business, and identifying and managing them effectively is crucial for optimizing performance and achieving desired outcomes. Here is an example for constraints. A restaurant that experiences high customer demand during lunchtime. However, the restaurant only has a limited number of staff members available to handle customer orders, serve food, and attend to other customer needs. This constraint of limited staffing creates a bottleneck in the restaurant's ability to provide efficient and timely service. So in this example, the number of staff members is the bottleneck or the constraint. The limited number of staff members of this restaurant limits the performance of this restaurant's activities. Why it is called a bottleneck? Let me give you an example. Let's consider this glass of water which has water in it and a bottle of water which also has the same amount of water. And what will happen if we make this glass of water upside down? The water will pour out instantly. And what will happen if we make this bottle of water upside down? It will take some time to drain out all the water in this bottle. Why? Because there is a bottleneck here. This is the neck of the bottle. So, this is known as the bottleneck. This bottleneck restricts the amount of water that can be flown out from this bottle. Whereas in this glass of water, there is no bottleneck. So what will happen if we make this glass of water upside down? The water will drain out immediately. Because of this bottleneck, it will take some time to drain out the water from this bottle. The same concept used in management accounting. This is known as a constraint or a bottleneck, which restricts the performance. Organizations should reduce or, if possible, eliminate constraints or bottlenecks in their systems in order to optimize operations and reduce inefficiencies. These are the steps to reduce or eliminate constraints or bottlenecks. First step, identification of constraint. The first step in managing constraints is identifying them within the system or process. This involves analyzing the system's operations, resources, and performance to determine the factors that limit or restrict its output. Constraints can be identified through various methods, such as data analysis, process mapping, observing workflow, or gathering input from stakeholders. In the case of the restaurant, the constraint might be identified as limited staffing during peak hours, which hampers the restaurant's ability to efficiently serve customers. Then exploitation. The restaurant can exploit the limited staffing by optimizing schedules and tasks. Experienced servers can be assigned to handle the busiest sections, while less experienced staff members assist in other areas, maximizing the available workforce productivity. This means the business can exploit the bottleneck resources using existing resources within the business. Subordination. Non-constrained resources such as kitchen staff or support staff can be subordinated to support the limited staffing. prioritizing time-sensitive dishes in the kitchen, and having support staff assist the cleaning tables or refilling water glasses can help alleviate the workload on the serving staff. Alleviating the constraint. If the restaurant consistently faces staffing shortages during peak hours, the constraint can be alleviated or removed by hiring additional staff. Increasing the number of servers or support staff allows the restaurant to better handle customer demand, reduce wait times, and improve overall customer satisfaction. And finally, repeat the process again. Managing constraints is an ongoing process that requires continuous improvement efforts. As the restaurant's operations evolve, new constraints may emerge or existing constraints may shift. It is important for the restaurant to continuously monitor its performance, gather feedback from customers and staff, and revisit the identification and management process for constraints. By doing so, the restaurant can ensure that its operations remain optimized and any new or changing constraints are addressed effectively, which simply means eliminating or reducing one constraint can create a new constraint. So, this process should be an ongoing process. Now, let's do this example. Identify the bottleneck in the following process. There is a production line where 1 kilogram of raw material will be compressed into one block and send them into the storage. There are three machines, machine A, machine B, machine C. Machine A will feed the raw material into the machine B. Machine B compresses the raw material into blocks, and then machine C will send the blocks to the storage. This is the production line. Now let's find out what is the bottleneck machine in this process. The machine A can feed 10 kilograms of raw material to machine B within an hour, and the machine B can compress 8 kilograms of raw material into blocks within an hour, and then the machine C can move 12 blocks into the storage. As now you can understand, within an hour, machine A will feed 10 kilograms of raw material into machine B, but the machine B can only compress 8 kilograms of raw materials into blocks, which means 2 kilograms of raw materials will be left out, but machine C can send 12 blocks within an hour. So what is the bottleneck machine in this production line? It is machine B. This is the bottleneck. Why machine B is the bottleneck resource? Because it only has the capacity to compress 8 kilograms of raw material into blocks within an hour. But the machine A will feed 10 kilograms of raw material to the machine B within an hour. So there will be a 2 kilograms of raw material during that hour without being compressed. This means machine B restricts the performance of this production line. Remember that bottleneck resource can be a person, an activity, a machine, or a process which restricts the performance. Now let's discuss about the main topic of this video, which is throughput accounting, which is also known as throughput costing. So far we discussed about absorption costing and marginal costing. Both of them are traditional costing methods. Now we are going to discuss about a new costing technique, which is throughput costing. Throughput costing is an accurate costing technique which only considers direct material cost as the variable cost. Direct material cost is the raw material cost. So under throughput accounting, we only consider the direct material cost or the raw material cost as the purely variable cost. All of the other costs will be considered as fixed cost. In the modern day business environment, direct labor cost is more likely to be a fixed cost because most of the employees are getting paid a fixed salary instead of a variable salary. So now you can understand why the direct labor cost is considered as a fixed cost. Because in the modern day business environment, employees are getting paid a fixed salary. So the direct material cost will be the purely variable cost within an organization in the modern day business environment. Under marginal costing, we calculated the contribution per unit, which is equal to selling price per unit minus all the variable costs per unit. Now we are going to calculate the throughput per unit under throughput costing. Throughput per unit is also known as the throughput contribution, which is equal to selling price per unit minus direct material cost per unit. Direct material cost per unit is the only variable cost under the throughput accounting. All the other costs will be fixed cost. As now you can see, contribution per unit and the throughput contribution is similar except the variable cost. Here we only consider the direct material cost to be the variable cost. That is the only difference between the contribution per unit under marginal costing and throughput contribution under throughput costing. Except direct material cost, all the other costs are considered as factory costs or conversion costs under throughput costing. So now you can understand there are only two types of costs under throughput costing. The first one is variable cost, which is the direct material cost, and all of the other costs will be fixed costs. These are known as factory costs or conversion costs. Here are the P&L statements for marginal costing, absorption costing, and throughput costing. You already know about these two statements. We already discussed about these. Now let's discuss about the P&L statement under throughput costing. This statement is really simple and straightforward. We have the sales revenue and then we deduct the direct material cost. This is the only variable cost under throughput accounting as we discussed earlier. So we can calculate the throughput, which is this figure. And then we can deduct all the other costs, which are known as factory costs. So we can finally arrive at the net profit. This is the statement of profit and loss under throughput costing. Now let's discuss about why throughput costing is important. As we discussed earlier, direct labor cost is more likely to be a fixed cost. Under marginal costing, we considered direct labor cost as a variable cost. But in the modern day business environment, direct labor cost is more likely to be a fixed cost. So we can use throughput accounting when the direct labor cost is a fixed cost. Identification of constraints. Throughput accounting is closely associated with the theory of constraints, which identifies bottlenecks or constraints within a system that limit its overall performance. By recognizing and managing these constraints, companies can optimize their processes and resources to enhance the throughput. Throughput accounting provides a framework for identifying, exploiting, and alleviating constraints, thereby improving the overall efficiency and profitability of the system. Simplicity and relevance. Throughput accounting offers a simplified and more relevant approach to financial analysis. It provides a clearer picture of the financial impact of decisions by focusing on key performance measures such as throughput, operating expenses, and investment. By reducing complexity and aligning with the organization's core goals, throughput accounting provides a more actionable and understandable financial framework for decision making. Cost reduction limitations. While cost reduction is important, there are limitations to how much cost can be reduced without adversely affecting the business. Throughput accounting recognizes that cost reduction alone does not guarantee profitability and encourages managers to consider the impact on throughput and overall financial performance when making decisions. Improved decision making. Throughput accounting provides managers with a more comprehensive view of the financial implications of their decisions by focusing on maximizing throughput, reducing unnecessary operating expenses, and minimizing investment. Managers can make more informed choices related to pricing, product mix, capacity utilization, and resource allocation. This leads to better decision making that aligns with the organization's financial goals. Now let's do this example. A company manufactures parts for a vehicle assembly company. Selling price of a part is $21 and direct material cost per unit is $6. Direct labor cost per hour is $3 and it takes 1.5 hours to manufacture a part. Other variable costs per unit is $3. Calculate the contribution per unit and throughput per unit. So the contribution per unit is equal to selling price per unit minus all the variable cost per unit, which is equal to 21 minus material cost is 6 per unit plus 1.5 hours multiplied by $3 per hour plus 3. So the contribution per unit is equal to $7.5. Now let's calculate the throughput per unit, which is also known as the throughput contribution, which is equal to selling price per unit minus direct material cost per unit. So the selling price per unit is equal to $21 and direct material cost per unit is equal to $6. So the throughput per unit is equal to $15. Now let's discuss about resource allocation when there are multiple products. These are the steps to follow. First, identify if there is a bottleneck resource. If there is a bottleneck resource, then calculate the throughput per unit for each product. Then calculate the throughput per unit per bottleneck resource. Finally, start allocating resource to the highest throughput per unit per bottleneck resource product. This calculation is similar to the limiting factor calculation. Now let's do an example. What is the correct priority of products to allocate bottleneck resource? Machine C is the bottleneck of the production process, which means machine C is the bottleneck of the production process. They have given us three products, product A, product B and product C. Let's go back and see what is the first step. Identify if there is a bottleneck resource. There is a bottleneck resource, which is machine C. Then we have to calculate the throughput per unit for each product. So now let's calculate the throughput per unit for each product. For the product A, the throughput is equal to selling price minus direct material cost per unit. So $6 is the throughput per unit for product A. For product B, it is $12. For product C, it is $7. Let's go back again. Now that we have calculated the throughput per unit, now we have to calculate the throughput per unit per bottleneck resource. So what we have to do is we have to divide the throughput per unit values by the bottleneck resource per unit. So they have given us it will take 2 hours of machine C in order to produce 1 unit of product A. Since the machine C is the bottleneck, we can divide this 6 by 2 hours. And for product B, we can divide 12 by 3 hours. We can divide 7 by 1 hours for product C. So these are the throughput per unit per bottleneck resource. So this is 3, this is 4 and this is 7. This calculation is same as the limiting factor calculation. In limiting factor calculation, we calculated the contribution per unit per limiting factor. Here we calculate the throughput per unit per bottleneck resource. Then we give the priority to the highest value, which is 7. The next highest value is 4 and finally the value 3. So the correct priority of products to allocate bottleneck resource is product C is the first one, then allocate to product B and finally allocate to product A. Now let's discuss about the final topic of throughput accounting, which is throughput accounting ratio, which denotes by TPAR. Throughput accounting ratio helps evaluate the effectiveness of the system in generating throughput and improving profitability. Ideally, throughput accounting ratio should be higher than 1. This is the equation we can use to calculate the throughput accounting ratio, which is equal to return per factory hour divided by cost per factory hour. So this is the equation we are going to use to calculate the throughput accounting ratio, and these are the equations you need to remember in order to calculate the throughput accounting ratio, because return per factory hour can be calculated by using this equation, which is equal to throughput per unit divided by the time per unit on bottleneck resource. Cost per factory hour can be calculated using this equation, which is equal to total factory cost divided by the total time on bottleneck resource. Now let's do this example. The company manufactures parts for a vehicle assembly company. Selling price of a part is $21 and direct material cost per unit is $6. Total conversion cost is $24,000 per year. The company has identified a bottleneck in the production line, which takes 1 hour to process a part. The company produces 1,200 units a month. Calculate the throughput accounting ratio. So the throughput accounting ratio is equal to return per factory hour divided by cost per factory hour. Return per factory hour is equal to throughput per unit divided by the time per unit on bottleneck resource. So what is the throughput per unit value, which is equal to selling price per unit minus direct material cost per unit, which is equal to 21 minus 6. What is the time per unit on bottleneck resource, which is 1 hour, because it says it takes 1 hour to produce a part using the bottleneck resource. So the time per unit on bottleneck resource is equal to 1 hour. So the return per factory hour is equal to 15. Now let's calculate the cost per factory hour. Pay very close attention. This is where the students get confused and get the answer incorrect. This is equal to total factory cost divided by total time on bottleneck resource. So what is the total factory cost? If you can remember, factory cost is also known as the conversion cost. So they have given us the total conversion cost, which is $24,000 per year. So $24,000 per year. So for the denominator, total time on bottleneck resource, This means what is the total hours that will be spent on the bottleneck resource in order to produce the total units. The question is giving us the company produces 1200 units and it will take 1 hour of bottleneck resource to produce 1 unit. So 1200 multiplied by 1. So this is the cost per factory hour. Is it? No, it is not. This is incorrect because the 24,000 is the conversion cost per year. And in the denominator, this is the value per month. Look at here, 1200 units per month. We cannot use two different times for numerator and denominator. We cannot do that. Either we have to convert both numerator and denominator into per year value or per month value. It can be a per day value, it can be a per week value. For any time duration, both the numerator and the denominator should be the same. So now let's convert both the numerator and denominator into a same time period. So the numerator will be $24,000 per year, and for the denominator 1200 units per month. Let's multiply this by 12. So this will become per year value. Then multiplied by 1 hour. This is the bottleneck resource hours that will take to produce one part. So this will become a per year value. If we want, we can convert this into a per month value. This is how we can do that. 24,000 divided by 12. So this will become a per month value. For the denominator, we can use 1200 units per month multiplied by 1 hour of bottleneck resource. So this is the per month value. Both of these calculations are correct. Both of them will give the same answer. So remember that when it comes to calculating the cost per factory hour, both the numerator and the denominator should be in the same time period. It can be a day, it can be a week, it can be 2 months, 3 months, annual, biannual, or any time period. Both the numerator and the denominator should be the same. Otherwise, you will get an incorrect answer. So the cost per factory hour is equal to $1.67 per hour. Now we can calculate the throughput accounting ratio, which is equal to return per factory hour, which is $15 per hour divided by cost per factory hour, which is equal to $1.6 per hour. So the final answer is 8.98. This is the ratio. This ratio does not have any units. Thank you for watching. See you in the next video.